Well, Bajaj Finance in its Q2 performance reported a profit degrowth for around 36%, mainly dented by elevated provisioning. However, the company and the management sounded a lot more positive and encouraging of the outlook going forward. Taking a look at what the brokerages are saying, we have a mixed review. In fact, NIRMAL BANG has mentioned that the company has been front-loading provisions in FY21 in order to return to high growth in FY22. They are confident, and the company is also confident of regaining market share and reach 70% among the OEMs in the near term. The balance sheet for Bajaj Finance is one of the strongest within the NBFC sector. They expect near-term pressure on profitability and some asset quality risks that could keep the stock under pressure. Nevertheless, they have retained their accumulate rating on the stock with a target price of 3,564 rupees per share. Well, Goldman, on the other hand, believes that the asset quality was better, but strong growth revival is still in the uncertain zone. The management's unchanged on guidance as far as the credit cost risk is concerned. They have rather cut their earnings by almost 5 to 12% in FY21 over FY21 to 23. They're maintaining a neutral stance with a target price of 3,230 rupees per share, and they also add that the company is well positioned to benefit from the changing landscape. Axis believes that Bajaj Finance reported a broadly an inline set of results. The provisioning dented the Q2 profits. However, they add that management believes that disbursements would pick up over the next 1 to 2 months and would be on an improving trajectory on a month-on-month basis. The AUM growth guidance has also been revised from 10 to 12% to 6 to 7% for the entire FY21. They also add that the company's calibrated approach towards growth along with cost control measures and stable NIMs will support performance on gradual opening up of the economy, and they are also maintaining their hold with a target price of 3,297 rupees per share. Well, lastly, MK, on the growth momentum front, they add that the management is relatively more optimistic for the second half of FY21. However, they add that regaining lost market share would be a time-consuming task. They continue to remain watchful of the performance of flexi loans, which also includes the converted flexi loans in Q2 FY21. So they also keep their estimates intact and await further clarity on growth and asset quality trends. They have maintained their hold rating with a target price of 2,950 rupees per share. So a little mixed review from the brokerages. Most of them believe that company is a lot more positive. Disbursements are going to pick up. However, they also await some amount of clarity on the asset quality and also on the growth prospects. However, things seem to be improving on ground for Bajaj Finance, and the companies and the brokerages mostly have retained and maintained their earlier stances, just factoring in a little bit of update from Q2, but broadly the sense is that things should improve going forward from here on.